US drops rates, China drops rates, and one of the biggest beneficiaries of interest rates drop is of course real estate. That's why I think this company's dividends are going up soon. And if you're keen to find out a bit better, continue watching. Hi guys, welcome back. Without holding you back too far, let me share with you this stock which I've just bought recently. And it's none other than Capitaland Investment, CLI. In this video, I'll be sharing with you why I bought into Capitaland Investment. I'll also be showing you how much I've bought into it. But before we get there, what exactly is Capitaland Investment? If you see in their presentation deck, they focus a lot on this: fee interest related business, FRB, and real estate investment business, REIB. What in the world are these terms? To a layman like us, we need a simplification. And that's why I've adjusted this image to show you there. Fee income related business, FRB, is actually service income. You manage your real estate, you collect agent fees for managing it. Very simple theory. Bottom part, real estate investment business, you can see it as rent, because as a landlord, you rent out the place, you get rental income, and also dividend income, because they do own REITs, correct, who become the direct owners of that real estate. When the REITs pay dividend, they also pay to all shareholders, including Capitaland Investment. Everything we've mentioned over here revolves around a keyword: investment, investment, investment. There is a dissociation away from property development, and that's why I'd like to play up this clip by Capitaland CEO Mr. Lee Chi-Kun.
Major restructuring the last few years, first with the Sanderson Bridge, and then to split between CLI and CLD to where we are today. I think going asset light, building an asset management platform is what we want to do, we commit to do, we will get there.
Now, Capitaland Investment CLI has actually split away the property development portion to privatize it. Right now, what they want to become is an asset-light asset management platform. That's why leading with this is very important if you want to become a shareholder of it. On the fee income related business, FRB, you would realize they have listed fund management, which is managing the REIT, private fund management, which is funds that are invested by institutional investors and accredited investors, things that are off the market. Lodgement management, that is something CEO Mr. Lee Chi-Kun is from. He used to head Escorts division. Lodging, which includes hotels, are something that they are looking to scale up aggressively all across Asia and of course Australia. And last but not least, commercial management, which means they manage a mall that is not owned by Capitaland Investment. On the bottom, you'll see two key components: investment properties, which previously included ION, they used to own it and collect rental income, and also sponsored stakes in listed and private partner stakes in private funds. Listed funds is actually REITs. Private funds are again those that are off the market and only for institutional investors. So to understand Capitaland's business, let me point you to the yellow portions first. Capitaland Investment owns REITs, correct? You do know that Capitaland has a lot of REITs, correct? And when REIT pays dividends, it comes at the bottom section, REIB income. To run the REIT, Capitaland Investment also charges unit holders like you and I a fee that's typically an expense to the REIT itself. That is the top portion, fee income related business. Using that logic, you also understand when it comes to private investments, they also earn dividends in blue, and they also earn fees from their private funds in blue. Once you understand it, I'll next help you understand what is their strategy in a layman term. I pointed in the blue arrow at the bottom left. They have been divesting properties as seed money into fund vehicles. I'd like to use this point to explain to you how they create more fund ownerships for fee income. How they do is, firstly, they create a fund, they sell some of their properties inside it, they raise more monies from institutions that will allow the fund to buy more properties to diversify. And one such example is actually this recent joint venture whereby CLI actually created a China Business Park RMB Fund 3. So inside this, the investment play their part is they sell the Ascendas iHub Suzhou into this fund as a sponsor of this fund. Then institutional investors inject new monies, as you can see, 1.2 billion renminbi. With the new monies, they can use the capital and maybe even collateralize on this iHub Suzhou to go and purchase more properties. And to show how it works again, I have a diagram for you to see. Investors invest their money with CLI to buy real estate through this fund. Over time, what CLI might want is for the investors to buy more and more stake of this fund away from CLI. Or over time, together, they could sell small ownerships to other investors. In this way, CLI will have opportunities to slowly divest away direct ownership of the property. And more importantly, you need to understand, when they sell their own property into a fund, they are moving it from their own balance sheet as an asset to a subsidiary or associate. And that's why they often say it's off balance sheet. And with this, they have a plan to divest, which is to sell at least $3 billion worth of their own assets into funds and eventually manage the fund. If you were to look in the reports, you commonly see something like this, which is mentioning about the capital recycling process. This image was before the ION sale, which means this year they've achieved the targets of moving at least $3 billion worth of properties off their balance sheet. So why does Capitaland Invest want to be asset-light or have less properties on their balance sheet? Now let's bring back up the model. What we can see over here is, again on top, fee income related business, at the bottom, real estate investment business. Let's start with the bottom first. When they own properties directly like ION, what happens is it's measured on the price to book. When they own REITs, the REIT valuation is measured with possibly a target price. These are all industries where market is not too excited about already. What market likes these days are service related income. Now it's trendy. Like Grab, they don't have cars, they have a service platform. Like Airbnb, they don't own hotels, they have a service platform. So service related income nowadays get a better valuation and is where CLI wants to move towards. It's quite common for these kind of businesses to be valued at least 20 times price earning. So they want actually a price earnings expansion. So why do they want to sell ION? I drew a red arrow over there. When they sell ION, they can reinvest their monies to go and create more funds whereby they are managing it as fee income. Understanding that is crucial. For investors of CICT, they'll be thinking, how can CLI and CLCT be win-win? Because one is a buyer, one is a seller. How can that transaction of ION be a good price? It can still be, because there are two reasons. The first is CLI still owns stake in CICT. Helping CICT grows would still benefit CLI, correct? And the second is CLI is actually moving towards a different direction. They do not want to own the asset already. So clarifying that, let me share with you next my opinion of CLI. I'll firstly like to map CLI against CICT in terms of share price. CICT possibly bottomed way earlier. They've shown a growth in net property income, and that's why markets actually rallied ahead of time. CLI, Capitaland Invest, on the other hand, only saw a bottom on 14 August 2024 at $2.50. But since then, share price of it has been climbing aggressively, while CICT, like many REITs, have kind of hit a roadblock and stagnated in share price growth. If you'd like to hear a bit more on CLI and REITs, let me next invite you to my new upcoming Georgetown Meet, whereby we'll be discussing finance and mingling over a fun-filled event. This year, we're going to take learning to a new experience. Hi guys, I'm here at beautiful Esplanade to share with you this upcoming event, Georgetown Finance Meet 2024. It'll be on 3rd of November, which is Sunday, and I've booked this restaurant entirely for us. So if you're looking for ideas, where to deploy your monies, where to get good returns for 2025, let me answer them with my presentation coming up in this event itself. And as always, if you have personal finance questions that you have always wanted to ask me, this is a chance that we can mingle and let me answer them for you. Thank you again for supporting the channel. Look for links below to sign up. Tickets are going fast and I hope to see you there. Back to CLI. Just now I mentioned about the timing of this recovery being different, and more importantly, share price of CLI has still been climbing as of 30th September 2024. Why is it not like REITs where everything is real estate? Is it because real estate investment managers REIM, which is what CLI hopes to be? Maybe not so. While CLI wants to be more fee-based, market really isn't pricing it like that yet. If we were to map Capitaland Invest with Blackstone and Brookfield, which are one of the bigger REIM real estate investment managers in US, you would realize that the share price trend doesn't really look the same, correct? The two of them have been climbing aggressively, and more importantly, since 18 September, one has continued to climb while the other has fallen. The data is mixed. That's why I don't think it's because REIMs are climbing, unlike REITs. I would believe that it's this next reason suggesting why capital investment is climbing in share price. And is this likely stimulus from China? Over here in this map, you would see CLI against Yanlord, which is an unlisted company in Singapore, having a lot of China property ownership. You realize the share price of Yanlord has skyrocketed, correct? And this is actually observed in other Chinese real estate players like Capitaland China or Country Garden, all of them have seen a spike. So CLI owning China properties could be gaining in share price because of the overall China sentiment. Do note again, China is possibly the second biggest market of CLI, which means also this spike up by CLI could be very volatile. We don't know how long this feel-good factor for China's stimulus would last. Let me know in the comment sections whether you agree with the analysis so far, and smash on subscribe as always as we get to 60,000 subscribers. I would release more findings along the way on good quality stocks to own for your own dividend portfolio. Now let's move on next to how I'll be assessing CLI moving forward. CLI is actually a very highly complex business structure. Like Berkshire Hathaway, they have listed stuff which are REITs and unlisted stuff which are funds privately owned with institutions. Berkshire also has listed and unlisted. But unlike Berkshire, CLI is purely in real estate. So if you can't understand it fully, maybe we at least understand the macro of what impacts CLI. The first I'll be focusing is on the real estate investment business REIB, because again, the fee related business doesn't seem to be what market thinks of it right now yet. So the first thing regarding REIB, real estate investment business, is that has interest costs really peaked at 4.1%? Management has mentioned that they believe this has peaked. So we should see data that the debt cost is going to come down in the next few quarters. The debt funding situation in China really looks a bit better. Right now, as mentioned over here in this screenshot, Capitaland Invest has raised $1 billion with a Panda bond, and their fixed coupon is only 2.8%, AAA rated 3-year tenure. So this is a very low interest cost. If we were to see presentation slides, you would realize that interest cost on the right hand side has eaten into its balance sheet investments REIB performance. This should be the worst. Second half 24, we should see that 98 million start to increase back up. The rest of the parts explain what kind of geographies they are in. Long story short, Singapore, which is under the branch of Southeast Asia, and China. India is something they mention a lot, but if you see, the component from India is just so small right now. So as long as Singapore and China do well, in the near term, the sentiment will reflect that. The second part of macro is, are the REIT ownerships of Capitaland doing well? CICT has saw an increment in terms of NPI, net property income. And this is a quick screenshot of what it owns. Besides CICT, they also own Ascendus, Escort, CLCT, and CLINT, and also CLMT. If the REITs are paying good dividends, then actually CLI could pay good dividends also. I'd like to play a clip from them again, which is actually from CFO Paul Tam.
In terms of the dividend, we do think our 12 cents cash dividend is quite sustainable. You look at our operating cash flow, and I didn't mention this earlier, but operating cash flow looks lower this first half because we took the DRP from CLCT and CICT. So that brought down the cash component. But certainly 12 cents, or even up to where we want at 18 cents, we think is quite manageable for us.
In conclusion, if Capitaland Invest increases its dividend, I think the price would soar. If China's sentiment turns better, I also think the price would soar. So all in all, I think the macro environment is very beneficial for it. It's been beaten down way too long, and I'm willing to take a position right now in it, as you can see over here. I've been gradually buying already, and if it does pull back, I will be adding on to positions. Let me know your thoughts in the comment sections, and again, look out for Georgetown Meet coming on 3rd of November 2024. With that, I'll sign off from this video and see you in future ones. Take care as always. Goodbye.